group because it's already on YouTube. So everyone should have access to that. But can anyone hop onto YouTube for me real quick and just make sure that everything is good? You guys can hear me fine?
Yep, it's working all good.
Perfect. Alright, so then let's go ahead and get started. So welcome to the new quarter, everyone. Pretty excited so far, yeah? Guys ready to hit your goals this week or this quarter? Good stuff. Alright, so we're going to do a quick recap of quarter 3 first. What did we have going on? So obviously it has been quite an eventful year so far. A lot of geopolitical stuff going on, a lot of stuff happening from the central bank side, a lot of stuff happening with inflation and everything, right? It's been a crazy year so far. And quarter 3 was pretty much a continuation of that. So we saw aggressive interest rate hikes from the Fed. We saw a lot of aggressive hikes from Bank of England. We saw a little bit of a slowdown happening. Just this recent interest rate hike that they had, it was a 50 basis point hike instead of a 75 basis point hike, right? A little bit of a slowdown there. ECB essentially doing the same thing. Now they're getting on board and they're increasing their rates as well. Bank of Japan is really one of the few ones that is not increasing their interest rates either. They're going to maintain their interest rates at the negative interest rates that they've had and maintain their accommodative monetary policies. So overall, we're seeing that inflation is still increasing. So when you're looking at CPI, when you're looking at PCE, when you're looking at PPI, RPI, everything like that. And then for the UK particularly, the UK's mini budget, it was adding more concerns when it came to inflation. So because of that, you know, and everything that's happening with the markets, this market sentiment that was setting up, which is essentially fear, right? Now you're starting to see more fear because if inflation is increasing and you're increasing interest rates, yet inflation is continuing to increase, that means that you have to be a lot more aggressive. So when you're a lot more aggressive and you're starting to see a somewhat of slowdown happening in the economy, which there's a lot of data and economic sentiment around that as well now that leads to a fear of a recession, right? But the most important thing with any recession is not that you're going to go into a recession, but rather how fast can you come out of a recession. That's going to be the most important thing. So then the UK came up with their temporary unlimited bond purchases, and they're going to make a full assessment of that on their November 3rd meeting, so next month. And there's also been a lot of concerns around that, where many people, institutions in general have stepped up and they said that, hey, we cannot wait until November for you to help us out, right? They've said that to the chancellor, they've said that to the government essentially, but there's still a lot of fear around that, and they're saying that we're going to have to wait until November 3rd meeting, and that's when they're going to give you a full assessment of what's essentially happening. So now, because of that, because of the continued inflation concerns, there's an expectation that there's going to be another aggressive hike from Bank of England. And recently, like I said, there was a slowdown to a 50 basis point hike, but now the expectation is, can you come back to a 75 basis point hike, or, the same sentiment that they had for the Fed recently? Are you going to have a 100 basis point hike, a full percentage hike, right? And what are the chances of that? But also you have to keep in mind, what are the consequences of that going to be? That's only going to add a little bit more fear into the markets and help you shift the sentiment more towards a recession. So with that being said, that was pretty much for the UK. And then from the Japan side, same thing. They're maintaining their accommodative monetary policies. They're maintaining their negative interest rates. There's expectations of getting more stimulus as well in Japan. So there's expectations of that, which obviously, spiral into the same market sentiment that they're maintaining negative interest rates while everybody else is increasing interest rates, right? And then also the energy prices increasing due to the sour relationship between Russia and Europe. Europe pretty much being cut off. And then now that you're going into winter, obviously you're going to need that energy to provide more heating to homes and things like that in the winter time. So now there's concerns about that. And energy prices are increasing because supply is so little, right? So basic economic supply, demand, price, there's a high demand for it, very little supply, so obviously prices are increasing. On Thursday, the German government announced plans of a $194 billion package to help with the energy cost. But that same day, if we go onto Forex Factory, the same day German prelim CPI came out, and it increased from 0.3% to 1.9%. Right, so they're announcing a plan to go ahead and help with the energy cost, but obviously that's one way to provide more money into the economy, right? And now as you're doing that, inflation is continuing to increase. All you're really doing is adding on to the problem. So now with all of that, taking all of that into consideration, now in quarter 3, we've had this sentiment as we're moving into quarter 4 that recession fears are settling in, and there's an expectation that there is going to be a recession early to mid next year. So maybe not quarter 1, but starting quarter 2 of next year, we're probably going to see a recession. But again, the most important question here is how fast can you pull out of a recession? Is it going to be something similar to last time where we spent, 5-6 years just trying to move into this economic growth, and then finally we started to see an increase, bam, COVID hit, and we're right back into this economic slowdown that's happening? Or are you able to pull yourself out of this recession a lot more quickly? So now going into quarter 4, we're carrying on this sentiment, but now you're adding more onto it. Can we see another aggressive hike from the Fed? So we saw news that they were maintaining this sentiment that they want to hit a 4.5% target going into next year, mid next year. But because of inflation concerns, obviously we're getting more data around inflation increasing. That number has increased maybe to 4.6%, 4.75%, maybe even 5% essentially. And that is what we talked about last week, if you guys remember, in our trade breakdowns, in our weekly outlooks, in our live sessions, everything like that, where when you have high inflation, you need to continue increasing your interest rates, if not to that level, but close to that level. And that's really how you're going to tame inflation. If your inflation is sitting at like 8.6% or whatever, 8.3%, but your interest rates are only at like, let's say 3% or 4%, that's really not going to cut it, right? You're going to have to increase your interest rates a little bit more aggressively to really control that. And then the next thing is the UK Chancellor announcing that there is going to be a medium-term fiscal plan announced on November 23rd. So the two key dates here are going to be November 3rd, which is the full assessment meeting, and then November 23rd, where there are plans about this medium-term fiscal plan, and essentially what is that going to entail. And then the third thing here is the US Senate has voted 72 to 25 to pass a stopgap bill to fund the government operations through mid-December. So that is something that we're going to get into here as well in these articles. So far, any questions about the recap we just did for quarter 3?
No.
Perfect. So now to add on to these energy prices, we have our first article coming up where it says that OPEC is going to consider output cut of more than 1 million barrels. So obviously we know that OPEC is this cartel where they come together, all these different countries and their leaders, they come together and they decide, looking at the global demand of the economy, of whether or not they're going to increase oil production or are they going to decrease that down. So a lot of countries have gone to these leaders and asked them to increase the production, because we know that, for example, in Europe, they're struggling with, the energy prices because of the supply. Same thing with the UK, trying to help them out. The US is trying to help them out. So there's these issues essentially that's going on with these low supplies, and you are seeing these energy prices increasing across the board. But OPEC's first response to that was, we look at the global demand. We're not looking at individual country demands. And for that reason, it's really up to the individual countries to decide how they're going to manage the supply that we're putting out. And so there were talks about increasing the production. They did for a little bit, but now it seems like they're looking at the overall global demand, and they're seeing that there is the global economy slowing down, and in the face of rapidly tightening monetary policy. So, central banks getting a lot more aggressive. And so because of that, they're expecting to decrease the output of barrels here essentially, and reduce their production. So this is going to be a very important thing to watch out for in this upcoming week essentially, and you will see how there's a lot of market sentiment already leading up to these fundamentals, but right when these fundamentals come out and when the actual OPEC meeting happens and when their remarks come out, you will see the volatility in the markets. Any questions about this article? No questions? All right, perfect. So they're going to meet on Wednesday. So, make sure you guys are keeping your you're keeping this news pretty much on your radar when you're trading USD CAD, US oil, or any other commodities essentially. Let's go ahead and move on to the government shutdown. So this last note that I pretty much just talked about in the Q4, what we're looking at. So the U.S. Senate, quick backstory, they voted 72-25 to pass this stopgap bill to fund the government operations through mid-December. And this has pretty much been signed by President Joe Biden on Friday. And what they're going to do essentially is, this is to help the government from shutting down, right? So we've had this issue recently as well. Even last year, going into December, we had the same exact issue. You're hitting this debt ceiling with the U.S. And then now there were discussions around that time of the government essentially shutting down because they couldn't really come to an agreement. And also because they were running out of money. And now we're back at this same exact thing, full circle. So in this short-term spending bill, it includes a $12 billion aid to Ukraine, as well as U.S. disaster relief. Hurricane Ian, we've heard about that, right? So hopefully everyone is safe down there, and hopefully everything is okay now. But the stopgap bill was approved by the U.S. House earlier in the day, and then by the Senate on Thursday, and it will finance the government until December 16th, and that's really when they're going to come back and revisit this. As we continue down here, the forecast favor Republicans taking the majority in the House in January, and a longer stopgap would have given the party more say in any final 2023 spending decisions. So as we can see, there's obviously some back and forth that's happening here. Same thing that happened last year as well. They weren't really coming to an agreement. So that's what this bill is about. We didn't really see this in the headlines. I had to kind of dig this out. But, this is one important major thing too going into the end of the year that you guys want to be watching out for, especially when it comes to the US dollar. Now moving on to US30. So we are also going to break down that chart today, but I want to give you guys some more fundamentals here. So last week, we saw that US30 ended up closing at a much lower level compared to the previous quarters this year so far. And a lot of this, again, comes from this fear of continued increased interest rates leading into a recession, and also inflation continue to increase, right? And so with all of that, and then of course all the geopolitical stuff that we have going on, and the macro fundamentals that we've already covered so far, taking all of that into account. But the main thing is the Fed, the central bank. That's the main focus of the markets, and the central banks are going to continue increasing their interest rates and then eventually move into a recession, which is the expectation going into next year. So that's what the markets have been pricing in so far, and the expectation is that sentiment is going to continue into Q4, but maybe in the end of Q4, so maybe the second half of December even, we might see a little bit of relief, as we do almost every year. Any questions about this so far?
Nope.
Okay, perfect.
No.
So let's go ahead and take a look at this week economic calendar. So we're starting off quite easy today. So you have the Australian bank holiday, you also have Chinese bank holiday, and then when you go into London session, you have the Euro or the German bank holiday here as well. So quite easy. But from Switzerland, you have CPI data coming out. So if you're trading, CHF pairs, that's one thing that you want to watch out for. If anything, I would say to really take the day today to kind of set up for the rest of the week, do your pre-trade analysis, look at some of the key fundamentals that you want to keep on your calendar. So again, OPEC, if you're really trading that, any government news that's going to be coming out. So when you're looking at the UK, when you're looking at UK Chancellor, things like that. So just make sure that you're taking today to pretty much get ready for the rest of the week. Going into Monday, so tomorrow, we have a ton of PMI data coming out. So final PMI data coming out. Really prelim PMI data already kind of creates the volatility in the market, not so much the final, because a lot of this stuff has already been priced in. But you might see a little bit of more volatility if any of these numbers here are missed. So for example, I'm going to give you an example of the German final manufacturing PMI. The previous was 48.3. The expectation is that we're going to maintain it. So if it comes below 48, I would say, not even 48.3, but like around 48, where it comes out higher than 48, so maybe even like 49 or 50 or anything higher than that. That's really when I expect the volatility in the markets. Other than that, if we're coming close to these ranges, I don't really expect a lot of volatility besides maybe the 15-minute time frame or so. But that's about it. So I would kind of keep my eye on the higher time frame. So look at the hourly, 4-hour, daily, those time frames, and then kind of figure out what essential setups are you going to be looking for. Going into New York session, so you have the ISM manufacturing PMI coming out, which is going to be 2 hours after New York opens up and an hour after New York Stock Exchange opens up. So you might see a little bit of more volume around that time as well. And then going into Asian session on Monday, again, another Chinese bank holiday, but you have interest rates coming out from Australia. So if you're trading the Australian dollar, odd JPY, odd USD, anything like that, this is something that you want to pay attention to. They are also expecting to see another 50 basis point hike, so a 0.5% hike here, like a lot of other central banks. Going into Tuesday, we have in London session, you have the Spanish unemployment change, you have PPI coming out, you got the ECOFIN meetings coming out, a lot of low impact news. So I expect that to be a little bit of a slow day as well. But Tuesday is really going to ramp up the unemployment side of the data for you guys to get ready for NFP on Friday. So if you're trying to trade Friday for NFP, start looking at the JOLTS job openings, which is again 2 hours after New York opens up and about an hour after New York Stock Exchange opens up. So right in between that volume time anyways. Plus you have a high impact news, the JOLTS job openings. We are expecting that a little bit more jobs are opening up here, but overall the sentiment is that all of these numbers are going to start slowing down a lot more going to the end of quarter 4. And then even next year, quarter 1 and then quarter 2 is really when the expectation of this recession starts. So with that being said, that's one data that you guys can trade going into Tuesday. And then you have the ECB president speaking and FOMC members speaking as well. Another Chinese bank holiday in Asian session. Then you have the New Zealand's interest rates coming out. Same thing, they're expecting another 50 basis point hike here as well. So a lot of central bank news essentially coming out. We already have the Fed coming out. We had Bank of England, we had Japan already, last couple of weeks, and now we're starting to see some more central bank coming out, but they're all following the same sentiment. Continue to increase at levels, but eventually bring inflation back down to that 2% for them. Going into Wednesday, that's when we have OPEC meeting coming out. And so if you guys are trading USD CAD, if you're trading US oil, anything like that, then OPEC meetings is what you want to watch out for. Any sentiment that they're going to be putting out is going to be very important into the markets. So once again, a lot of final services PMI coming out in London session, but after that, I think the more focus is going to be on the OPEC meetings, and then also another employment data coming out, which is the non-farm employment change, getting you ready for NFP once again. Then you have the services PMI coming out as well, so you could trade that, and I think Wednesday is going to be a better day to pretty much trade the volatility and the volume as well. Just be careful with your trades, understand the limitations of your trade on Wednesday. Then going into Thursday, another kind of a slow day a little bit, where you have the ECB monetary meeting accounts. So that's going to be important because I do expect a lot more volatility around this time as well, as soon as that comes out for any euro pairs. And then you have the challenger job cuts, and then you also have the weekly unemployment claims, which haven't really had a lot of impact into the markets unless we've completely missed these numbers. And then you have FOMC members speaking. So Thursday is going to be a little bit more of a technical day. So trading more based off of technical analysis rather than economic data. Then going into Friday is the big day where you have NFP coming out. So that is the day that we would be trading together, among the other days throughout the week. But Friday is going to be very important, where they're expecting a little bit of a slowdown compared to the previous. So notice how this is completely different from the sentiment that we have been seeing for the rest of the employment data throughout the week. So that's what you guys want to pay attention to, all the other data that's going to be coming out. If we miss that completely, then that's going to set you up to whatever the expectations of NFP is going to be. Make sense?
Yes, makes sense.
Any questions? Okay. So we will start off with GJ first, then go into gold, and then US30. So let's start off with the yearly first. So I know some of you guys may not have the yearly. That's fine. That's why I'm showing you guys this, so you guys can still have a good understanding. So on the yearly, we're still in this downtrend. We've held on to a nice support area down here from like 2016 time and then coming into now. So let me change that. There you go. So coming into even 2020, we've held on to nice support. And then 2021, we started pushing up. This year, we're pushing right back up again. But it seems like we've already made a top wick. A little bit of a slowdown in the volume, which makes sense given all the fundamentals that we have been seeing so far. So that's that 14300 area. If we zoom in a bit more, what I want to mark off right off the yearly time frame is going to be this candle body low. So if this candle flips below this, then obviously it's going to be a bearish candle. Then we can potentially look for some sell opportunities. But the main thing for me going into the end of the year is just holding on to this area as support, which is going to be that 155,800 mark. And then drop down to the quarterly time frame. So when we come onto the quarterly time frame, same thing, a bearish trend. Zoom in a little bit more into the recent price actions. Last quarter, we made a massive bottom wick rejection. I'm sure you guys remember this. This literally happened in just like one day. And then a massive bottom wick rejection, rejected that, pushed back up. This new quarterly candle just started forming. So if you can, I would say do not trade today. At least give price some room to make some top wick and bottom wick rejections for this new quarterly candle. Right? So just give it some time. But if price continues pushing back down here, then I think you guys would have much safer sells. If price can continue pushing, I would say like around this 160,500 areas and then a continuation push down. At least by then you guys will have enough room and price will have enough room to make any wick rejections. Target that 155,800, and then this is more like a liquidity grab here though, so you guys definitely want to be careful. But I'm saying that if you want to trade like these wick rejections that this quarterly candle will be making, you have some good ranges that you can scalp here. So based off the quarterly time frame, all I'm really getting is confirmations of our levels. So I'm going to mark off this quarterly resistance here as well, which is at 165,200. Drop down to the monthly. So as you can see, for September, so last month of quarter 3, we closed as an indecision. So that should tell you that just wait for price to create any wick rejections, find its direction, and then look for your potential trade opportunities. But what we can do is mark off this zone right here into these areas. So these are all these wick rejections. If price can continue breaking below this, that's when you have those clean sells coming back down into 155,800. But if price just makes a bottom wick rejection here and then flips back up, then you're potentially looking for buy opportunities going into 165,200. But this is going to be a very key level. So either this needs to be broken and respected as resistance for your sells coming down into 155,800, or it needs to be respected as a support for you to continue pushing back up. When you come onto the weekly, so this is why I said that this is a liquidity grab, because look at this level. All of this is consolidation. What happens when price taps into a consolidation like this? What is it doing?
It's collecting orders and grabbing liquidity.
Right. So how do you confirm that with the last weekly candle? How do you know that this was a liquidity wick?
We have a lot of volume following.
A lot of volume that followed, right? And then we push right back up below these areas, and then we close right above 160. So if you want to look at the movement, essentially price pushed down. This is the starting point, right? Price pushed down for about 600 pips, flipped back up, and then closed at its own high for another 600 pips. That's a lot of volume. That's how you know that this was liquidity. So what you want to see here for any potential buy opportunities, if I were to actually draw out the candle for you guys, was wait for some form of a bottom wick rejection, so some sort of support, and then a continuation back up. As price breaks this previous weekly high, you got all these clean buy opportunities to come back up into 164 and even 165,200. Even if price does not make a bottom wick rejection, you need to see some clear support being formed here prior to price breaking this previous weekly high and then a continuation back up. The purpose of the support is price essentially telling you that this is the floor and I'm not going any lower than that, to put that in layman terms, right? When you come onto the daily time frame, So a nice push up, again, liquidity grab and then push back up, a ton of volume. The next candle gives you a nice bottom wick rejection here as well. A ton of volume, closes at the top of its range. And then the last daily candle closed with nice top and bottom wick rejections, but coming right back into this consolidation area. So this is why you want to make sure that you're waiting for price to break above this top wick so you can clear out all of this consolidation. You don't want to be trading in a consolidation, right? So if price can continue breaking above this 162.200 mark, then I think you have clean buy swing trades above this. And then you can come back and target, let's say initially around 153 pips first, and then you can let that run into a 300 pip move if price can continue breaking above this, right? Anything in between, I want to be very careful. I would say just look for potential scalp opportunities, but understand that 160 mark is going to be the limitation of your sell, and 162.200 can be the limitation of your buy. If price can break out of these areas, then you got those clean buy opportunities. When you drop down to the 4-hour time frame, you see a ton of consolidation. So again, another confirmation that in previous consolidation areas, you're going to see consolidation again. Yes, we're holding on to a support, but you start to see some of this volume kind of dying down. So that's why it's a new quarter, it's a new month, it's a new week. Just give price enough room to make these wick rejections and then continue in one direction or another. If the 4 hour is consolidating, the 1 hour is going to do the same exact thing. So on the 1 hour, it seems like we're holding on to a nice little resistance here. So I would say just wait until tomorrow if you're going to trade any GBP, JPY at any point. Even for scalps, just wait it out and let price kind of make its wick projections prior to continuation in one direction or another. Any questions on GJ before we move on?
No.
All right, let's go ahead and move on to gold. So same thing, let's start off with the yearly time frame. So clearly we have already broken the previous yearly low, which is at 1680 mark. We push back down, created a new low, so I'm going to mark that off here as well. It's at 1615. 1615, so if price can break above 1680, then we'll look for potential buy opportunities coming back up into like the 1800 mark here, which is this top wick rejection. But other than that, we want to be quite patient here once again. Drop down to the quarterly, zoom out. So we've seen a lot of consolidation here when price was pretty much recovering out of that recession. And then after that, we start to get a lot more, much better fundamentals in general coming out, and a lot more aggressive interest rate hikes as well. We push back down, and that's really what caused this corrective move. Right now, we're getting the same sentiment. We're getting, you know, a lot more interest rate hikes as well, and that's where we're coming back and revisiting some of these areas. Consolidation on any time frame essentially means liquidity and also just liquidity generation in general, and then also that's where you want to be very careful as well. So we've tapped into this area, we've rejected this, and now this new quarterly candle has started forming for any potential sell opportunities. I want to see some sort of a top wick rejection into 1680, 1700 areas, and then a continued push down. That's when you can come back and target this wick fill, and if that's filled, then you can come back and target into these next support areas. Without that, I'm not looking for any sell opportunities. We need those wick rejections on this quarterly candle. If not, and let's say we're looking for any buy opportunities, then same thing. I want to wait for some sort of a bottom wick rejection here first, coming back down. I'm not saying it's going to come all the way down to 1615, but we need to see some sort of a bottom wick rejection and then push back up above 1680. Then we can start looking into 1700, 1755, and then 1800. Let's go ahead and drop down to the monthly. So when you come onto the monthly time frame, so price has been holding on to clearly a nice support right into these areas, as you guys can see. And then that's exactly what we rejected into, and now we're pushing back up closer to the 1680 mark. So if you guys want, I'm not really going to create a zone here because we already have that line, but what I'm going to do here is create a zone here instead. So this is the candle body lows here essentially, and then same thing with this monthly candle. I'm going to zoom in here a bit more, where we came all the way down into 1615, rejected that, pushed back up and closed right into this zone here, closer to 1680, and then finally the next monthly candle is what took us back down. So that's what we're looking for. Can we see a resistance being formed here and then a continuation down for any sell opportunities? When you come onto the weekly, that's where you see that support being formed, right? So nice break and retest support and then a push back up. Last weekly candle, we made a nice bottom wick rejection right into 1615, and then we pushed back up into these areas, rejecting into 1680. So for any continued sells, once again, a top wick rejection and then a continuation back down for any sells, or a little bit of a bottom wick rejection to kind of hold on to a support into these areas, and then a push back up for any potential buy opportunities. Also, from a technical perspective, understand that we have just created a new low, so we have to retrace and create lower highs in order for us to look for those continued sell opportunities. So right now we are still in this bearish trend. Make sense?
Yes.
Perfect. When you come onto the daily time frame, this is where you start to see that exhaustion. So in the last 2 days of last quarter and then even last week, we start to see the volume dying down. But again, we are rejecting into these previous consolidation areas where price was consolidating before below 1680 and then a nice sell back down. So we're exhausting out here. So essentially, can we just see a little bit of consolidation prior to a continuation back up? But this week is going to be important. It's the first week of the quarter. It's the first week of the month. You also have a ton of fundamentals coming out, a lot of market sentiment setting up for the end of the year. So you guys want to be very careful here. Come on to the 4-hour time frame. What I would do is wait for price to continue breaking below this right here. So let's just say 1660. So price break below 1660, and then you have your sell opportunities to come back down below this area for about 160 pips or so, and then a continuation down to 1615 if price continues pushing. But currently, when you look at the current 4-hour candle that just started forming, it's already breaking the previous highs, a lot of bullish momentum already, holding on to 1660 as support. So this is where you want to be very careful, because price can just consolidate here as it did for this entire week almost. So I'm not saying there's no scalp opportunities. There's definitely are scalp opportunities within here, but you want to understand the limitations of your trade, right? So if you're looking for any buy opportunities, wait for this 4-hour candle to close, and then if the next one gives you a bottom wick and pushes back up, then those are potential scalps that you can take coming back into 1670 or even 1680 zone. But for me personally, I would say just stay out of this if you can in this entire consolidation area. When you come onto the hourly, same thing, holding onto a support. You got 25 minutes before this hourly candle closes. Just wait for it to close. But today, again, if you can, just stay out of the markets and then look for potential trades going into tomorrow. Can we move on to US30?
Yes.
All right.
Yes.
Perfect. Let's go on to the yearly time frame. So look at that momentum. So what I'm going to do is mark off this candle body low. The reason why I'm doing that, look at that massive liquidity that we got back in 2020, and then a push back up here, and then this is where we pretty much ended up consolidating out. We're coming back and we are revisiting these levels here again that we did back in 2020 when this candle started forming. So I would say 28,500, which will adjust as we drop down to lower time frames. So this is going to be a key area for us. But ultimately, when price does drop down into some of these areas, I am expecting the Fed to step in and then provide more liquidity around that time. When you look at this, back in January, that's where we held onto a resistance and then a massive push back down. This is where the liquidity was provided, and then we push right back up. Last quarter, we closed at the lowest of this range with no bottom wick, but a nice top wick rejection, a nice liquidity grab. So same thing here, going into end of the year, going into quarter 4. I can expect to see some relief here, obviously, and that's what the sentiment is. Going into December, maybe a little bit of relief, but maybe we'll see price pushing back below this 28,500. So that's what the sentiment is regardless. There are going to be aggressive interest rate hikes. The focus here is against central banks and their hawkish commentary, and then also those tightening of the monetary policies and everything like that. So taking all of that into account, the sentiment here is still that we're going to continue pushing down, but eventually getting into December, we'll probably see a little bit more relief of this bearish pressure to the downside. So come on to the monthly time frame. You can create a zone here if you'd like. Let's say right around here, where price is holding on to this resistance, and then you had a nice sell-off. All that liquidity that was provided came back, revisited this area, and then we had a little bit of a corrective move and then a push back up until we started consolidating out up top here. After that, we really broke out of this bullish structure that started back in 2020. So we broke out of that. Price ended up consolidating out right into these areas. We started seeing this sentiment kicking in as the discussions around interest rate hikes started increasing, and then also we started to actually see those interest rate hikes as well. So push back down. Every time we create a new low, we're coming back and we're collecting more liquidity from all this consolidation. We got a nice top wick rejection, push back down, creating a new low. So here essentially, can we see a pullback, maybe even into this 30,000 mark, and then a continuation down? So what would that look like? Potentially a top wick rejection and then a push back down here. So something like this maybe, and then a continued push down, come back and revisit into some of these lows, maybe even into 27,000 mark, and then maybe see a little bit more relief as we continue to make these lower lows and lower highs. Any questions?
Nope.
All right, so what I'm also going to do is mark off 30,000. Let's get onto the weekly time frame. So here we are clearly making these new lows, and now we've tapped into a major support area, which was previously a resistance. We saw a little bit of consolidation here back in February before a massive sell-off that happened. So we're tapping into a very important level. This is why we want to be very careful when we're looking for any trade opportunities. Some top wick rejections, continuation back down, and you can take advantage of those top wick rejections as potential scalp buy opportunities as well. So what I'm going to do is just move this line up instead of drawing another line on here, but 29,200 is just a short-term target for us. And then let's see if we can get a top wick and then a push back down, or is price just going to hold on to a support here, and then we can look for those potential buys coming back up into that 30,000 mark. You come onto the daily time frame, last daily candle, closed with a ton of volume to the downside, and the new daily candle just started forming. So really the new daily candle across pairs, I wouldn't really even pay that much attention to, because it's the first candle of the new quarter, new month, new week, right? So just pretty much I would kind of disregard that candle. Personally, I am, just so I can give price enough room to make top wick, bottom wick rejections and figure out its direction. This new daily candle really is not going to be enough to tell me the direction of where we're going this quarter. Maybe the next 2 or 3. Going onto the 4-hour time frame, so a lot of seller's pressure here again, and then we're pushing back up bullish. So if I were to look for any buy opportunities, let's say going into tomorrow, I'm going to keep my focus on this 29,200. If we can break above that, then we're looking for potential scalp opportunities coming back up for around 274 points, and then a continuation back up into, I would say, around 29,700 mark, and then coming back up to that 30,000 mark. So I think this would be a pretty good range to trade for potential buy opportunities going into tomorrow. But today, if price just ends up consolidating out, then I wouldn't be trading. Go on to the hourly. This is a nice setup here where you've got a support being formed, and then a bottom wick rejection candle flips back up and breaks the previous highs. So that tells me that we're pretty much getting ready for some pullbacks here, and then maybe even consolidate out, collect more orders prior to a continuation in one direction or another. Does anyone have any questions about anything that we went over today? So the fundamentals, economic calendar, or any of the 3 pairs? Even on YouTube. No questions?
No question.
All right, you guys know what you're looking for?
Yep.
Yes.
All right, perfect. So I will send out the schedule for this week in just a little bit, but other than that, people on YouTube, I will see you guys shortly. So I will post the schedule as well on there for our live session and the simulation session for this week. So just keep an eye out for, the post I'll make in a little bit. But hopefully this weekly outlook was helpful, and even helpful in understanding what to expect for this new quarter. But make sure you guys are trading safe. Make sure that you guys aren't, over trading, over risking, or anything like that right off the bat. It's just the first day of the quarter, so at least give this new quarter a day or two to kind of figure out. As you saw on the economic calendar, there's really not much coming out today or even tomorrow, but things might even start picking up starting Tuesday. So other than that, have a great rest of the weekend, everybody, and I'll see you guys soon.